We are a little under 2 months away from the tax deadline of Tuesday, April 15th, and we want to help you on your journey to file by breaking down a couple key terms. Here to help me out, we've got Andrew Gordon, partner at Gordon Law. Andrew, good to have you back on the program. There are two big components of taxes that can either lower the amount of tax you owe or lower your income, thereby lowering your taxes. Let's start with lowering your income, which is a deduction. Define a tax deduction for us and talk about how it helps.
Yeah, thank you very much, Brad. It's great to be here. And although tax deductions and tax credits, people often use these terms interchangeably, they're actually very different. And knowing how to utilize these can mean more money in your pocket, greater refund come tax time. And so the first to be aware of are tax deductions. Tax deductions reduce your ordinary income. And so, for instance, if you're an individual, you can choose between the standard deduction or itemizing your deductions. And as an individual, for someone filing individually, that's $14,600, or filing joint, that's $29,200. But if you itemize, it depends on your actual expenses that you incurred during the year. So it could be much greater than the standard amount.
So what are some of the examples of common deductions?
Yeah, Brad. So some of the most common ones, for instance, are charitable deductions that you incurred during the year. So if you had donated to a charity, make sure you get those receipts before tax time. We're only a couple months away, and a lot of people scramble before that deadline. But make sure you start preparing now and getting those receipts handy. The next is medical expenses. Now, there's a threshold that you must hit before you can start taking medical expenses, but this is another great one. Also, if you own your home and you pay a mortgage, you can take a deduction for your mortgage interest paid. The banks will typically send a tax form, so make sure you get that tax form and keep it handy for your accountant. And the last one, but perhaps one of the largest, is for state and local taxes. For those of you out here that are in a high tax state, places like California or even New York, you can get a deduction for the taxes that you pay in your state.
So let's move on to tax credits. What are those and how do they work?
Yeah, so again, sounds like a similar word, deductions and credits, but they work very differently. While deductions reduce your income, tax credits reduce your actual taxes. They are a dollar for dollar deduction against the taxes paid, not your income. And so your income applies a tax rate to it when determining your taxes. But if you have a tax credit, you can actually take that dollar for dollar against the taxes paid.
And so can you give us here some examples of tax credits?
Yeah, one of the most common is education credits. So if you're attending college or if you have a dependent that's attending college, there's actually two different education credits that are available. And it's possible to maximize one over the other. So talk to your accountant, or if you're self-preparing, make sure you look at both of these education credits. The next one is the child tax credit. The federal government will actually give you a credit for having kids. And so while they may be more expensive, there are some benefits as well. The other one to be aware of is electric vehicle credits. So while it's nice to have a new car, you'll also get a tax credit at the end of the year as well. But you need to make sure that you keep all of your receipts, keep the invoices so that you can support that credit come tax time. And the last one to be aware of is that if you made home improvements, specifically energy efficient home improvements, these also act as credits against your taxes.
Does my e-bike count as an electric vehicle? Perhaps that's too into the weeds here. But look, it's realistic for a lot of people who might be, in the gig economy and delivering for DoorDash or delivering for Uber Eats and whatnot.
That's a great question. And the federal government actually has specific requirements on the type of vehicle for the credit. So my guess is probably not.
All right. Thanks for entertaining the question nonetheless. Finally, let's help our viewers hack the system a bit here, making sure that they are being as efficient as possible when trying to save a buck or two. What's a tax loophole that people you've seen use to save money?
So, Brett, I'll tell you one of the best ones, and you don't actually even have to pay me for this, and that's tax loss harvesting. And you can do this at any time during the year. If you're invested in stocks or any property and you're going to have a gain at the end of the year and pay taxes on it, you can sell other property, other stocks, and realize losses to offset those gains. But the big loophole here that a lot of people don't know is that you can sell a stock at a loss and buy a similar one right away and still have that loss. So for example, maybe you sell Coca-Cola and then you buy Pepsi the next day and you can still have that loss.
All right. Not advice, of course, from us, but of course on the loophole, a good spotlight on that. Andrew, thanks so much for taking the time. Great to see you.
Thank you.